good question from Robert, and this video will be about only this question, and I'm going to show you a little bit more about how we use, how we trade those breakouts and the contractions. More importantly, what I'm going to be explaining is how to find an entry and an exit on a trade idea, and what factors do you look at to choose the entry and SLTP. So that's the question. I'm going to explain it using the US dollar index. We've done this analysis last week. If you guys remember, we had this contraction here forming towards the upside, and what we did was we used the Fibonacci retracement tool to the top side. So we start from the bottom, put the 100% at the bottom, put this one to the top, and then as you can see, the 50% and the 61% add up perfectly to the green lines that we've added from before. Now keep in mind, these green lines were added before, so I expect that the US dollar will continue to weaken straight down towards the 50%, maybe 61, and then it could find some support. Now remember what I said, it could. We are reactive traders, so what we're doing is, something happened here, right? What happened? The FOMC. We did say in the room, unfortunately we didn't do that webinar, but in the room I did send that message that the dollar will become strong and then weaken, and that's exactly what happened. Here's that green day, you see right there, the dollar was green, and then yesterday, boom, weakens, because it made a retest of the trend line, and it's going to continue to weaken. There's not much to stop it. I mean, we've closed under the wicks here, the shadows, so it's going to go down. No doubt, the dollar is going to continue going down. So, one sec, guys. Okay, so this is how we find the take profits, right? I explained this to you guys. If we're looking for the downside, we put the 100% here and the 0 here. If we're looking for upside, we put the 0 here and the 100% there. 100% should be facing in your direction. How would you place the stop loss? Well, now that's another thing that we need to understand. Firstly, I'd say for day and swing trading, it's totally safe to target the 50 and 61, especially on daily charts. Keep in mind, your profits and your risks are going to be very different if you're finding a contraction on a 1 hour, 4 hour, 30 minute, 1 week, 1 day. Profits range a lot depending on the time frame you're trading and how big the contraction is. This is a very big contraction here. It's a huge contraction. So naturally the move is big too. So that means that we should see some good movement on dollar pairs. And that's how I would find the take profit. In regards to stop loss, you're targeting first of all this trend line here, but keep in mind, it's very important. I got stung big time on oil. I was expecting it to go down. Let me show you this. Let me show you where I messed up. So I got stung big time on oil. Look at this. So I expected it to continue going down here. I thought this was the contraction right there, and that it would continue going lower, right? And I started selling heavy on that little account I have, and it went up, 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 and then boom, 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 right down to my stop loss, or take profit. But I went out, and the minute I went out, it started going down, and I was like, God damn, what to do? But it's okay. I'll recover that account quickly. It's that small one that I'm targeting 300% ROI in a month's time. So I dropped down to 475 equity, which is a 50-something% loss on the balance, but we'll speak about that later, about a lesson I'm going to do on resilience and how you can recover these amounts, your losses actually. So, going back to US dollar index, as you guys can see, there is good room for price action to go down. The 50% is usually reached pretty quickly, so I think that today or Monday it should be reached. 61, I don't know if it's going to get reached, but it probably will, because this is a strong breakout and it could be a change in the short-term trend. This is the short-term trend. Look, it's going up. The dollar was strengthening in the short-term trend. So this year, you can see since April, you see. So this year the dollar started off weaker, and then boom, in January it starts this range, but starts making higher lows already in March, and then boom, and then boom, and then boom. So we'll see if this is a change in short-term trend, and that 2019 will be a weak dollar for the year. Based on this contraction here, it should become a bad year for the dollar, because look at this. On the end of 2000 and towards the end of 2017, right? Here's January. No, that's the beginning, sorry. So the beginning of the year, we also had a contraction. You see, there it is. We had a nice contraction here. It was a bearish contraction. Sorry, a bullish contraction. And then pop, we have a breakout, and then we made, let's see where price action went. So we're targeting the upside, so we're gonna go from the bottom to the top. And oh, no, sorry, my bad. One sec. From the bottom to the top. And you can see the 50% being reached there. See that? And it only took 1, 2, 3, 4 days. Well, actually on the 5th day. 5th day it reaches the 50%. Doesn't reach the 60, but it reaches the 50. And then goes down again. And comes right back to the same level, creates a double bottom, and continues higher. But we can make contractions pretty much everywhere, you know, and that's the most beautiful thing about contractions. They're always around. There's one there, boom, up. There's another one here, boom, up. You know, and you're just waiting for it to come down, and you just boom. You know, it's not always gonna work out. Like it stung me on oil, but that's because I was not smart with it. I was checking short-term time frames, and I started selling here, and then it just took me right out. But it's okay. I mean, these things happen. That's a part of the game that we play. We need to accept these risks, and we need to live with them. In regards to the stop loss, Robert, this one's for you. So what you would do is you would go to a shorter time frame, depending on where you're buying or selling. If you were to sell here, naturally your stop loss should be a bit higher and somewhere away from key trading levels. And let me just show you this. So you see here, that's a little key trading range. Another one here. Then you're targeting the previous candles, the recent highs here. So you don't want to put your stop loss too close. Depending on where you're targeting for profit, it's a big thing. So you see, naturally I would set it here, and then your take profit would be here. So it gives you a risk reward of 1 to 2, which is decent, right? It's decent. And if you go down here, you have an even bigger risk reward, 3.5% higher than your loss, which is pretty good. So that's how I would set a stop loss. It's always different depending on what pattern you're trading, what you're trading. You need to keep in mind that there is these ranges as well. See, like, oh, come on, 1 second. This, for example, here, you see you can get the top, and then you do this, and then naturally, usually when we break out of ranges, we have channels. So here's one that looks like it's forming. So, you know, you want to target outside of this channel when you're taking your take profit. Your stop loss. But that's it. All of this in about 8 minutes. I hope you understood and start getting acquainted towards what I'm actually doing. It's Friday. I wish you a good day. And next year is going to be massive. I hope you guys are excited because I am.